Hey, it's Clay, and this will be a video chart on ticker symbol CGC. We will take a look at the 30-minute time frame. Real quick, what do I mean by 30-minute in case maybe you're new to charts? Instead of each one of these candlesticks here representing 1 day's worth of price action, which is what you would normally see, each one represents 30 minutes. So while this here may look like a few weeks worth of time, it's actually just the past 2 days broken down into 30-minute time slices. I like to do this time frame. I think it does a good job of telling the quote-unquote story of the price, and then just makes mapping out where levels of support and resistance a bit easier to see. This will mean a little bit more to those of you that watched yesterday's video, but if you didn't, as a quick recap, yesterday I talked about the fact that the price had made a very, very nice bounce, and that led to the valid question of, all right, well, going into today, is there any sort of true power behind that bounce that was underway? Is there any sort of genuine strength? Well, we got our answer, and no, there was not any sort of true power. That is, in trading lingo, what we would call a dead cat bounce. What gives me the right to call it a dead cat? Well, you look at where the price closed here, and then you correspond that back over here, and the price is literally right back to where it started before that bounce even began. And not to insult your intelligence, but price movements with true strength are not going to be going back to where they were. They're going to make progress forward. Now, don't get me wrong. Am I saying the price can never, ever make another good move again? I'm not saying that. I'm just saying that relative to the price action that occurred on Tuesday, this bounce simply just didn't have any sort of true power behind it, because if it did, the price wouldn't be right back to where it started. So that brings about the first update that needs to be made, and this comes about via a foundational rule in charting, which states when levels of support are broken and closed below, they tend to act as resistance. So in any sort of attempted bounce back up to the upside, $39 is now going to be that near-term area of resistance. I'm going to just get rid of that line up there. As far as if the price can push through 39, because I will give credit where credit's due, the bulls have shown the ability to do a very nice bounce. So in the event a very nice bounce happens again, and like I said, if it can get through 39 to kick things off, then yeah, that purple line right there could very well be within range. That is the 50-period simple moving average, so also keep an eye on that from a resistance standpoint. As far as levels of support are concerned, pretty straightforward right now. The bleeding stopped on Tuesday before the bounce started right there at 36, essentially 50. And if you were to pull up the daily chart, you will see that 36.50 range is definitely a very historic area. So 36.50, very, very important level of support going forward. But so far, so good. The price, did hold above it on Tuesday when it got tested. So we'll see what happens with it. But yeah, as far as the bounce that occurred on Tuesday, that was a dead cat bounce. But who knows? Maybe the bulls have something else up their sleeves, and there's another big bounce coming. We shall see. One of the biggest questions that I get is, hey Clay, how do you find the stocks that you trade? So what I've done is put together a free resource guide where I talk about the tools that I use to locate stocks that I find interesting and think may have potential. So if that sounds like something that could add value to you as a trader, then click on the image that is up on the screen right now, and I will email you the guide. The guide itself is very short and to the point, and best part, it's completely free. Thanks for watching the video. Let me know if you have any questions.